Just like in the industrial age, when we use coal and oil to power our businesses, we believe that at Google, the businesses that are going to win the future are going to be driven by data. So at a bank, you might ask, well, for the last couple of centuries, we've been using data, we process data, we analyze data, but something has changed. And here to talk about that change, please let me introduce Mr. Terry Gordon from Standard Chartered. Terry? So Terry is the Senior Manager of Next Generation Banking, Standard Chartered, and has been covering financial services for the last 12 years. He works on cutting-edge projects, emphasizing the creating digital value propositions geared towards today's digitally savvy consumer. He's worked at American Express London and AXA and Lloyds Bank. And something you may not know about Terry, he's learning how to fly a plane currently. And his last story was that on his way of flying at about 1,000 feet, or towards 1,000 feet, the door popped open and he couldn't get it to close. And that was the closest near-death experience you've ever had. And what I said to him is, how did you feel? And he said, I love it, let's do it again. So here to talk about transforming how the big data transforms a bank, Mr. Terry Gordon.
Thanks, William. It's very tough following great presenters like Mel and Scott to talk about something like data. So I hope you'll give me a bit of leeway as a boring banker. So that's my first ask for the day. So I'm not a decision scientist. I'm a marketeer by trade. I'm not going to blind you with science or numbers around data, but I just want to give you a bit of a perspective to define what is big data. It's a term we've all heard a lot about, but we may not know what the definition is. Why is it important to our businesses? Is data just internal? Or Scott mentioned that there's a wealth of external data sources as well. And then how can we begin to leverage big data? Again, I won't touch on everything. I'll give a broad picture. But just to give an understanding of how we can do that as banks. But what are the challenges of doing so? If it was that easy, then we'd all be doing it, right? Before I go into a definition, does anyone tell me what this TV game show is? Jeopardy? So you may not know the contestants, so I'll introduce them. Brad is the biggest money winner in the history of Jeopardy, and Ken has the longest winning streak on Jeopardy of 74 episodes. Does anyone know the gentleman in the middle? Yes. Watson is an AI supercomputer built and owned by IBM. Why am I telling you this? Watson has been hired as an employee by a number of multinational companies. And the reason that he's been hired is not for his good looks, but is to help filter, process, crunch, and make sense of enormous amounts of data. Mel, we must go to the same place on Google Images. Busted. So what is big data? It's a term that we've heard a great deal about before. But one thing that I haven't found is a single agreed definition, either industry-wide or across all the businesses, around what big data actually means. We've been capturing vast amounts of data for a significant period of time. Credit cards have been in existence for 50 years. So all of that transactional data, that's pretty significant, right? So what's different about now? I think there's two main differences about big data. One is that it's the sheer volume of data across a number of different devices, different instances, different social reasons, different industries. Just an unthinkable amount of data is being produced today that wasn't being produced 10 years ago. The second thing, in terms of why I think we have a term called big data, is that we all agree as businesses that we should do something with this data. We should actually use it for a common purpose and to derive value for our businesses. In a way, we're almost walking generators of big data. And as the guys mentioned before me, one of the main drivers of this is mobile. So increased adoption of smartphones, thinking tonight in the evening, you've got a 4-screen play. So people watching TV, they've got their tablet, they may even have their laptop, or their housemate or partner might have their laptop, and you've got the mobile phone. It's not that we're using one and then picking up the next and using it. We're using them all at the same time, right? So that's the consumers' behaviour has changed. But innovation has also played a part of that as well. I think as smartphones have become to the fore, the user friendliness of mobile has led to the increase. I just want to make a mention of the region that we're in. Asia has the highest propensity for mobile transactions. Now, what I mean by propensity is Asian consumers are more willing to make transactions via the mobile phone. The reason I say that is because if you look at the West, so the US and Germany, they have the same growth rates of actual transactions through the mobile phone as Asia does. But what this region has that the Western regions don't is that willingness. And what that translates into is a massive opportunity for businesses like ours in a region like ours. So, Scott mentioned it earlier, we have an enormous amount of data that's being generated, and some of that may be old legacy systems, the transaction platforms, get an enormous wealth of data through credit card transactions, the location, the merchant, the industry vertical and things like that. We know more about the product holdings of customers. We capture more information in CRM platforms. We know what the balances are. We know what the total product holding is and the profitability of customers. We also know a lot more about reward programs. Obviously, reward programs have been around a long time, but we now have a greater depth of data around what people are redeeming on and how can we use that information to tailor to them. We've got offline bank touch points. So within the branches, we're now capturing what the customers have come in to ask for. Was it a balance inquiry? Were they trying to make some form of remittance? That's generally captured through a banking platform. If customers call into the contact centre, we're now capturing in a lot more detail with source codes and the like, what are they actually calling in to discuss? And even things like SMS and IVR, relatively outdated technology, but again, we know what people are doing through IVR call trees and things like that. The biggest change in terms of banking and data has been online, mobile and social. So we now have a wealth of information around what consumers are doing on our websites, on our public websites. What are our customers doing when they're making transactions in the secure banking portal? We also have mobile applications now. Many banks have bespoke apps which will provide a rich amount of data around what customers are doing with that application. How is that making their lives easier? But it's not just applications, it can be responsive design. So how many banks have made the plunge and allowed the website to customise to the device that they're accessing on? But if they do, using the platform that customers are contacting is a source of data where we can make decisions. And social media. Now, social media is massive, as we know, but I think banks are very afraid in terms of how do we do it. And we may be doing it, but in terms of fully committing ourselves to listen, as Scott said, is something that I don't know that banking as an industry has really embraced like other industries have. But if you look at it, if you look at the mentions that are being generated about our banks, whether we like it or not, you need to be listening for that. So that data can be imported and piped into CRM platforms. So they're the internal platforms, but as Scott mentioned, there's an enormous amount of external sources of data. Now, I don't have the great wheel slide that Scott had, but I just want to give you two fun examples of how potentially external data could be useful for banking. So think of a guy who's just got a new job. What's one of the first things that he may do? He may go to LinkedIn and add his new role to his LinkedIn profile. So that is an amount of data on a third-party infrastructure. How could we use that? He may need new office supplies. He may need a new laptop case. Is that something where banks could provide an offer based on rewards? Just a question. The second one is a guy who has just updated his relationship status to single on Facebook. So you could use with a car loan. But joking aside, if you think about TripAdvisor, the rich amount of data, you know, I use TripAdvisor, you know, in terms of where I'm going, reviewing the place that I've been. That behaviour is something that could be very, very valuable to a credit card, for example. I know that there are challenges in terms of would that data be available, but let's just think in terms of what is possible at this stage. So this is a slide by McKinsey, and it shows different industries and the potential of big data for those industries. So I appreciate it's quite small and you may not be able to read it, but the x-axis is the potential to create value with big data, and the y-axis is the ease of capturing vast amounts of data, vast amounts of useful data. And you can see the dark circle in the top right-hand corner is financial services and insurance. Now, that tells us, and you know, some of these things can be subjective, but I think we all agree that financial services and banking are among the best placed industries to really leverage and create significant value from big data. In terms of why is big data important, I mean, you know, it's a difficult economic climate at the moment. There were 15 banks, of the biggest banks in the world, who were downgraded by Moody's in terms of credit ratings yesterday. So Scott showed a number of different things that we should be focusing on. But one point of view is that, can we afford not to? It's almost like we have to focus on different ways to create value and generate value within our businesses. We're under greater regulatory scrutiny, but on the other hand, data could be used to assist with that. And in fact, regulators actually mandate that we treat and keep data in a certain way. The economic climate is squeezing margins, so interest margins are down. You know, we need to use the data around that so that we can mitigate that. And competition is an interesting one because it's not just our international banks and our local banks who are our competition. It's the new market entrants. It's the digital companies that have no bricks and mortar. We as banks need to have a wider view in terms of who are taking services away from us in terms of what we're providing to customers. How are they meeting customers' needs in a way that we're not? So a bit of information here. I'll run through a bit more in detail. Now, the column on the left shows some main areas where McKinsey have highlighted how banks can add value. Fairly obviously, improving the number of products that we can cross-sell and upsell. Using the vast amounts of data captured in the core banking systems to see where the losses are coming from, and using algorithms to monitor patterns on fraud and things like that, to see where the losses are coming from. Reducing attrition. Are there any leading indicators that might suggest if a customer is going to be leaving or cancelling some products? Are there any data-led decisions that can be made that show where there's inefficiencies and where some processes can be stripped out or automated? And one of the major challenges facing banks is the amount of capital that we'll have to keep under Basel III regulations. So using data, can we reduce the provisions that we have to keep, because that's going to be one of the biggest costs that we as banks have to put aside. Now, bearing in mind this isn't a decision science seminar and most of you guys are in marketing, I just wanted to add a few extra points to the McKinsey information, which is how can we use data for a more proactive point of view? Customising the user experience. Do we know how people are interacting with the information we're providing in our website? And if we have any mobile applications, what information is the most important? Can we use the information around what people are telling us, whether it be social media, the information that they're looking at on our websites and not looking at, to enhance the way we develop new products that actually further meet customers' needs from relatively vanilla products that we have today? Can you go a stage further from new NPD and create value propositions using that information? Targeting, I think, is a fairly obvious one around data, but using enhanced techniques, you can find micro-segments. So rather than the one-size-fits-all approach, you can actually target in a much greater way, and it could be purely message, not necessarily different products. And kind of tying back in with what the other presenters said, changing the entire business model. So rather than making superficial changes and replacing the old platform here and there, but actually completely reinventing the way that banks and customers interact. I'm just going to share a very brief case study in terms of one way, a very light way that Standard Chartered has leveraged data. So within our personal loans portfolio, we have used data on existing customers' holding, how they use the product, repayment history and things like that, to actually come up with relationship-based pricing. So that for good customers, we can actually compete and offer a lower price where we have that data. It seems like common sense, and I'm not sharing this with you to show you how great we are, but the point is that the data is there. So rather than making subjective decisions and use the data to make informed actions that make a difference for the business and the customer. So this is a dry subject, data mining, but I thought it was important to share this because, okay, we understand that big data is important, but what are the practical examples of why and how we can do that? So these are 5 good themes developed by UCLA. The material was for a slightly different purpose, but I've taken it because I thought it would be good to share it. So anomaly detection. I think this is something that banks do fairly well already in terms of spotting fraud transactions and things like that with the assistance of associations like Visa and MasterCard. But there's a number of different methods that this could be used for. Association learning. Now this is the Amazon business model. So Amazon aren't great because they can sell stuff to you online. They're great because they have so much information and data on you, and they can use that information to recommend future purchases. How many people get the recommendation emails from Amazon? So I love Amazon and I use it quite a lot. And I want to tell you a story. So I was sitting at home looking through Amazon, thinking what I don't need that I need to buy. And my wife, who was my fiancée at the time, saw that I was on Amazon and said, "Oh, can you buy me this wedding book, wedding planning and the like?" So I did, and I bought it. About 3 weeks later, I got the email from Amazon recommendation. I'd already bought the book, and I had a list of recommendations. So instead of the usual books that it recommends for me, which are boring history books, sports books, and the like, I had a book which was recommended, Is He Right For You? Now, I don't know about you, but I think that its gender and positive lifestyle targeting was a bit amiss on that one. But joking aside, that's a really useful one for banks because moving away from purely transactional-based relationship into a more lifestyle and needs-based relationship, if we were able to spot patterns based on customer need, then there could be a way that we can position rewards and things like that. Cluster detection. So algorithms to detect relevant patterns. So if someone is upgrading their LinkedIn account, I'm using LinkedIn again, but if they pay for LinkedIn Pro, is that a leading indicator of certain behaviours? Are they going to change a new job? Or on the other hand, is it going to be a fraud risk? A default risk? You've got to look at the different areas of leading indicators that can come from a science like cluster detection. Classification. So this is a practical example is a spam filter. So when emails come in, it reads the email information, the data, to spot different elements that could be classified as spam. And then if it comes off the tick list, it will classify an email as spam. But there are a number of different financial examples as well. And regression. So regression is obviously a predictive-based science. So can we use algorithms and models based on transactions to predict future behaviour? All sounds so easy, but we don't seem to be very good at it. So why haven't banks driven value from big data? I've found 4 main reasons. There's a lot of reasons why, and there's a lot of commentary why, but these seem to be the common threads around why we're not very good. I'm not going to go through all of them, but it obviously costs a lot of money to store vast amounts of data. It's not just that, it's not always on one platform, and banks grow through acquisitions, so there may be a number of different legacy platforms that you need to absorb lots of differing sets of data into one central place. And if you're capturing lots of data, you need to make sure that the data has high integrity. So is it of high quality? There need to be processes and checks and balances to make sure that you're not making judgment of poor data quality. Now, I don't pretend to be a decision scientist, so I wouldn't know how to do their job, but I know that we could do with more decision scientists in banking. It is an underserved talent area. But are those people the right people to join the dots? So would they know how to make decisions off of the insights? Would they know a broad enough overview of how banks operate? Especially international banks, very vast organisations, to be able to drive this value and tap into this value. Another problem is focus. So we may all agree that big data is an important subject, but do the senior management as well? And even if they do we have the right senior managers focusing on it? There are some I think there's an insurance company that created a position which is Vice President of Data. Now, it doesn't sound like a very exciting role, but on the basis of big data, it's something that is going to become increasingly important. And the other challenge is regulatory and moral. So if you think about it, we obviously have to keep the data secure, and there's protection legislation and things like that. So that can be a barrier to tapping into data. External data, we could all come up with some examples, but would they even share it? Are they even able to share it? Do they capture the permissions? Maybe they can't share it. Maybe over time that will develop as we move through the digital era, but right now that doesn't seem to be feasible. And the final one is, would it be a bit creepy if you're standing outside a shop and all of a sudden you get a text message or a data message, come in and get 20% off? It sounds great in theory, and we as banking marketeers think that would be amazing, but are customers ready for that, and would they be a bit freaked out if we did that? So I just want to leave you with this thought. So the bank of the future that stays the course will be the one that remains relevant and increases profitability and reduces cost. Pretty straightforward, pretty common sense. But my point of view is that that bank will be the one that fully leverages the opportunities that big data provides and finds answers to the challenges of technology, talent, and regulatory issues. And they will be the model for future banking. Thank you.